dealing with our zoning controls, which I would argue is really rewarding that property speculation. But even though they're rewarding property speculation, these fiddling with the zoning controls are not apparently to incentivize property speculation, but somehow perversely trying to disincentivize property speculation and encourage people to cash in by either building these barely profitable homes or sell their land to someone who might. So, like I said, this seems perverse to me, which is why I'm very pleased to introduce today's three speakers. We've got three people who do more thinking than most on this issue of how our policies can shape land values and so housing supply. But more than being the leading thinkers, I would argue they're some of the leading voices in public debates across Australia on how we can do this better. I'm going to introduce them all now, and then I'm going to hand the stage over to them. They're each going to present for about 15 minutes and take about 5 minutes of Q&A after their individual sessions, and we'll see how we go for time. We might have some more time for questions and answers at the end. So our first speaker is Dr. Tim Helm. He is formerly of Victorian Treasury and EY, but for the last 8 years, he's been an independent consultant. If you're doing it for 8 years, you must be doing something right to still have consultants, so you know what you're talking about. But Tim is also currently the Director of Research and Policy at the think tank Prosper Australia. Our second speaker will be Dr. Cameron Murray, formerly of the Ivory Tower with academia, but he is currently the director of his own consultancy/think tank, Fresh Economic Thinking. But I think Cameron's probably best known to most people for his media contributions and his highly regarded books, Game of Mates, The Great Housing Hijack, and With Paul Frieder's Rigged. And our third speaker today will be Henry Williams, formerly of the Productivity Commission and an economic advisor to the Office of the Victorian Treasurer at Tim Palace. Henry's recently been appointed the Director of Policy at a newly established think tank, the Policy Institute. So a lot of heavy hitters to present today, and I'll hand over to the first of them. Thank you, Tim.
No, thank you. Right, that was a superb intro, especially the parts about speculation and its role in housing production. And if you want a job at a think tank that tries to draw attention to the role of speculation in the economy, come and talk to me. Okay. Now, Cameron and Henry and I have been delivering these talks a few times over recent days. We're all in Sydney for the Australian Conference of Economists that finished yesterday and presented last night to Pia. So we're going to really try and be on time, a very disciplined version. So I'm going to hit a timer right now. There we go. And I'm going to check that this is working. Okay, it is. Wonderful. All right. Back. Okay. Right. Just checking which way was forward and back. So, yep, Ryan's introduced myself, my think tank. I think I'll pass that all by. And I'm an economist by background. And this talk today that will frame a little bit what Cameron and Henry will talk about is really in the zone of economics. And we're trying to talk to academics such as yourselves, and planners in the planning profession, trying to talk across the aisle, so to speak, and trying to communicate some economic concepts in ways that make sense to people who are not economists themselves. The topic of this one is really housing supply and stripping it right back to the raw, pure scientific question of why are houses built and what is our theory in economics for why housing production occurs. And the reason we want to understand that scientific question is that we've got critical policy questions right now around whether the regulatory system or the planning regulation zoning rules is a handbrake on production of housing, is therefore a contributor to making housing more expensive by way of slowing down supply. That's that really open policy question, and it's obviously a contested issue in the public sphere. We want to know there's a solid scientific backing in economics for any policy claims made, and I suppose our prize coming into this is that there's a lot of talk and not a lot of substance in certain claims being made. So we've had a real look at it. It's a lit review in a way about theories of housing supply and where regulation fits. So I'm going to try and distill those into simple terms for you today. This audience in the room, and hello to everybody online. Thank you for joining. Context, very obvious. People want housing prices to be cheaper. Economists now, as a profession, seem to be recommending, almost as the top line policy, that easing planning restrictions is how we're going to help affordability. And we're just asking, why do we, as an economics profession, believe this? What's our shared theory of housing supply and the effect of regulation? Can our theories explain all the relevant facts? As a personal observation, when I see these questions asked in the public sphere by planners, politicians, ordinary people in the community, why are houses built, how does zoning matter? I sense a couple of the answers you'll see are not that persuasive, as exemplified by the meme. It's either sort of trivially true that upzoning is supposed to make housing cheaper, and we all know why, and if you have to ask, you don't belong in the room, or it's actually something best left to the economic experts, and trust us that the models tell us this. Sit back and let us make housing cheaper, but you don't get to say how your city looks. And these are red flags for me for some lack of understanding. Prompted this project anyway. So I've got some slides I took to Pia last night. Point one, I'll just introduce some basics, some economic language, some concepts that help to frame the theories. I'll raise two puzzles that our theories need to explain, and then I'll talk through four, let's call them theories of housing supply. They're really just ways that economists have reasoned about the causes of housing production. And then one of them really stands out as the most coherent way to understand our world. And the fourth point will be some implications of looking at it that way. So four concepts to get you started so we're on the same page. This is how economists see housing, or at least ought to. There's really two prices in housing markets, rents and house prices, and they do different things. Rents are like the price of housing consumption. That's housing as a service. You get to occupy a place for a period of time, like a year, and they emerge from an allocation process where people and their dollars are squabbling over the housing stock, and the rent's the price that allocates that and fills up all the houses. So it's a really pure measure of housing service affordability. It's the best way to measure housing affordability, using rent. House prices, on the other hand, houses are this financial asset because they're long-lived. They provide a stream of rents into the future. So just like a share provides you a company stock gives you a stream of dividends, the price you pay for that stock, company stock or that company share, is a reflection of all the future dividends and all the future rents that you'll receive. So house prices vary with interest rates in ways you can see in the charts. We've had rents in solid black, not budging much in the last 20 years. House prices have skyrocketed, and that's because interest rates have fallen across the globe, including Australia. And these charts really replicate in every city around the world. Now, housing is best thought about as stock flow problem. The number of dwellings in Sydney is a stock, but the stock only grows through a flow. That flow is construction. There's a market equilibrium in the rate of that flow. We can call it the absorption rate. And you note that Australia performs extremely well on construction. World-leading rates of construction per capita, reflecting we've absorbed all that population growth and then some on housing construction for 20 years. Hasn't been a shortfall of production of housing if housing is expensive. This is a core point. There's two things you can do with land at any one time. You can build on it, and that's called housing supply, that's development. Or you can not build on it. And why wouldn't you build on it? You wouldn't build on it because it's an asset that rises in value. Development-ready land will rise in price, giving you a capital gain. And if you build on it too soon and you miss the opportunity to develop it differently later, you miss out on that gain. So it's two things, development or land banking. And land banking is just where you're not developing a site that's already feasible to develop in the sense that the change of use is profitable. You can demolish the old structures because they weren't providing much, put up some new ones. It's better, you make a profit. If you think about land as a financial option, pay a cost, construction, get the house price. Development just means exercising that option. Land banking means retaining it. So just like with a financial option, there's an optimal time to strike that option. It's not immediately. And that prompts, if you like, this is how economists see development. It's a choice of both the density, what you build, and the timing, when you build it. That's the right way to study this question. And on that, there's a lot of confusion in public debate. People say we want to zone for more housing. They mean more per area, more in the vertical dimension, if you like, the number of houses per site that you're allowed to build. How many stories tall can you build? Let's call that density. That's what the zoning system regulates. The outcome we want is faster supply, a faster flow, more housing for a time period. I've labelled it in red. They're related, of course, by how many sites actually proceed to development. I'll show you in a moment that that's not all sites that could be developed. There is land banking. And the key point is that the these limits on density don't limit or strictly constrain the rate of supply because of this land bank. So I'll show you. And the little diagram just illustrates that you can have fast supply at low density on the bottom right, or slow supply at high density. These two things are in different dimensions. There's a time dimension and a vertical dimension. Okay, so turning to really some puzzles that we want our theories to answer, this is the puzzle. Why is most feasible capacity not developed? If it's profitable to change the use, why doesn't that happen immediately? The day it's profitable to knock down the structure, build a new one. And I've illustrated this with Wellington, where I lived a few years ago. About 100,000, that was the planning headroom, if you like. You could build that many additional dwellings under the rules. Any one of 35,000 of those could have been built profitably immediately, but only 1,000 were. So that illustrates, 1 in 35 were pulled from that feasible pool of sites and actually turned into housing. That illustrates the land bank is the predominant behaviour. And Cameron and I have collated some evidence across different sort of jurisdictions where this is measured, different housing types, greenfield, infill. You get tiny portions of feasible capacity actually developed in any given year. That's a stylized fact. That's a fact we need theory to explain. Wellington upzoned and expanded that blue one by a factor of 4 in recent years. The green one didn't grow. In fact, it halved. And it just illustrates there's no mechanical link between that provision capacity by zoning rules and the uptake of that capacity. Now, this is another puzzle in a way. It's about pricing of land. And we think about land price as not emerging from kind of a cost of production of land because it's a natural resource. It's already there. The price is just its value, and its value in use. Developers and valuers think about that value as the residual land value, the sales price of a dwelling minus the cost of building it. That's what the land is worth. Sometimes, though, markets price land above that residual so that no developer can actually pay the market price and still turn a buck if they're going to convert land. So these are just some instances of that, and it's a bit of a puzzle. Land prices aren't grounded in a floor price of a cost of production. Why would they be priced so that you can't do the only thing you can do with land, just build it? Okay. 5 minutes. So you're going to get 4 theories in 5 minutes and 2 implications. It's going to be a wild ride. Hold on. It's just Econ 101. It's supply and demand. Well, what does that even mean? You'll hear that in how debates. To answer the question of why do we build houses by saying, oh, it's supply, is like saying houses are built because people are willing to build them. And it begs the question of why. Why and when are people willing to build houses? Why is a supply curve where it is, shaped like it is? What's its slope? So supply and demand is what economists call a reduced form, not a deeper explanatory theory. And if we just sort of imagine we understand the underpinning, the underlying dynamics of housing production, we'll reason about the effects of policy in really ad hoc ways. Little example is the PC a few years ago with the report on housing wanted to say that upzoning would make housing supply more elastic, price growth lower, but they couldn't get there with the reasoning. They just had to assert it. We didn't have a depth theory. Probably skip this. You might see, if you're a sort of an urban planner, you might have been trained in the urban spatial model, Lonzo Mills. It's not a model of the production of housing because there's no production of housing in it. It's just a stock, and it's every piece of land is always developed to the optimal density. There's never any land banking, so there's no land banking. We can't say anything about the rate of production of housing. So anytime you see the role of regulation on housing prices referred to through this type of model, know the person referring to it does not understand the role of that model. Getting a bit technical, but people have thought about housing production as a style of investment. An investment asset is worth producing when the input costs are lower than the asset price. So in other words, we could theorize that developers don't think about the future. They just arbitrage the way a currency trader would switch NZD and AUD and USD to equalize the price. Well, the developer just takes the house price and the 2 input costs and arbitrages and keeps doing so till there's no more profits available. Now that's coherent enough as an accounting identity. Yeah, I get it. Markets will price land ultimately so there's no profits from development. Sensible. But where does the land price come from? We can't explain that. We can't really explain when and why that arbitrage process causes a house to be produced. We can't explain supply unless we can explain the land price. So this isn't so much a theory as just an accounting idea. And what we're looking for is a deeper theory explaining when and why houses are built, but also why land gets its price. Now, and this is the way to think about it, and it's completely natural probably to all of you as planners or anyone that observes the city. For economists, it's sometimes a change to the sort of intellectual model they use. It's to introduce an element of dynamics, which is to say, let's imagine these agents in the economy look ahead to the future and they think, hey, I could build today or I could build tomorrow, and it might be better to build tomorrow. That's the type of model theory we think of. It's very obvious that this is the true representation of the world. And that answers our question of why houses are built by saying houses are built if it's more profitable than land banking. So it puts land banking, holding a site in undeveloped use, in a core central position in explaining housing supply. You'll only invest when development return gives you more profit than delaying. It also means the land price reflects the development residual at the right time to develop, not today's residual. And that can explain that second puzzle. And economists have a sort of class of models that represent this, and I won't go through that. So to wrap up, really, we want to understand supply of housing is the opposite of speculation on land. These two alternative actions, you can't do both, they're substitutes. And land banking has the central role in when and why housing gets produced. As Ryan said, if we're to understand why housing gets produced, we have to understand why anyone would want to speculate on land. And then we can think about how our policy settings might change that speculative incentive. A key point is that in these models that properly represent the developer decision, you can upzone, and that boosts the profit today and tomorrow, so it doesn't systematically cause you to develop sooner rather than later. You're still just as likely to land bank. And in some specific models, you can upzone a site and actually gives you one more reason to wait for the future. That upzoning might allow you to build at a higher density later at a higher profit than you would. Oh, here we go. There's time's up, literally says it. So we'll do one more slide, and it's just a quick reference to a literature you might have heard of as the zoning tax literature. If you're aware of Peter Tulip and Kendall, former Reserve Bank, an influential paper 5 or 6 years ago saying Sydney house prices were $500,000 higher than they would have been, and the problem was regulation. That whole literature is a claim that the land price is above the free market cost of land. If we didn't have regulations, we'd have free market. Land would have a certain price, and if we detect a price that's higher, then there's some naughtiness going on. And there's actually some other instances of this genre of analysis. The entire genre is not grounded in the right class of theory, a theory where the price of land emerges as the value of an option to build. It's totally ad hoc. It's baseless, these estimates. And really the true idea is not to imagine that land has a sort of free market cost and a price that's above it. The concept of cost doesn't apply well to land. You should think about land prices. That just has a price, not a cost. And only 1 minute over, I'm really impressed with myself. I want you to pat me on the back. Well, I guess, 5 minutes of questions from the... How do we take it? You may have online.
Yeah, we don't have any questions from online just yet, but if anyone in the room wants to start asking a question, more than welcome to.
Otherwise, we can save the time.
Yeah. So can we just have one question? Like, what's really? I'm not an economist, so I appreciate that attempt to explain that stuff to me. Like, how does risk get priced into these options, the land banking option versus the build, the development option? Because we do tend to think a lot about the risk of a developer building its houses and assuming they're going to sell.
Yeah.
But is it also then building in risk to not build now, and how is that work in some of those models?
Super duper question, yes. We do think about risk as appearing as another kind of development cost. That it's like a cost of development is you need a certain margin. Those margins are quite high in that sector because your construction might go wrong, you might get delays, your union might fight, the materials might not arrive, the market might change between buying the land and selling the houses. So the risks of building appear in that development cost. And you've asked, okay, there's a bit of uncertainty about the profitability of land banking. And that's absolutely true. It's actually, there's a class of results where the less certain the future, the less likely you are to commit to building. It's almost in a way that uncertainty is one more reason to wait. Because when there's uncertainty and you wait, information is revealed. Information arrives through time. And so waiting a little bit to see what the house price will be tomorrow might well be worth it. Incur a cost in a way by waiting. You paid for the land, had some financing cost. But if I just wait one more year, I'll know whether that new activity centre is really going to mushroom up with jobs and people. And we're going to know what people are prepared to pay for apartments in that area. I'm going to gain information. It's the price I pay is I have to wait for a year, but the benefit I gain is I gain information. And so that's one reason to wait. And it actually creates an important point is that when there's other sources of uncertainty, such as whether you'll be able to extract a better planning permission, whether you can get your cousin, the minister, to sign off something that's above the rules, these types of uncertainty, this kind of flexibility is actually one more reason to wait. If policy is not credible, there's a new tax announced that might be reduced, then one more reason to wait. Yeah. You know, yeah. Because I'll make it real quick.
It might be that someone else can answer too, because it's about looking at waiting. I mean, look, one of the things, I guess, if you're doing it land banking and so forth, and interest your views on I guess, the risk appetite of property speculation on the fact of ABS, for example, population growth. If you look at that, we have these population growth trajectories going millions and millions of additional people in the long term. So I'd be interested from an economics perspective, your view of that, that's demand, right? So that's real demand that the federal government has mapped going forward for decades.
Yeah.
So how does that, in your thinking on theory, play into this?
Yeah, so fast population growth means more demand for limited land in future, which means higher prices for space, and therefore for land in future, which means more benefit to waiting. So in that fast growth scenario, but I suppose I'd emphasize, maybe I should hand over to Cameron, it's really, actually it's an open area of research, understanding all the things that play into that develop versus delay decision, and therefore to the market rate of production housing. It's an open area with complexities, but what we probably need as economists, but also other observers of the housing conversation, is to say, first of all, we agree the framework for studying these questions, policy and scientific, is to understand that development is this striking an option on land. Land has sort of been invisible to a lot of economics. The fact that anyone would hold a site, a vacant lot, unused, doesn't exist in a lot of economic theories, even though you can look out the window, right? So our starting point is really not to say we understand fully what causes the production of housing, but it's just to say, let's agree the framework. I really get hurry on.
I'm sorry, Cameron, but I have one question from
I'm going to be super quick.
I'll make it really fast.
Yeah.
I'll try and be super quick. I get the theory that optionality is why you hold land, but for that to work on average, prices of land would need to be going up sort of much quicker than the cost of holding that land. Is that what the data shows? So that basically by the longer you hold, the more value you're getting in the longer term?
I'll make a real short answer, which is land's one asset you can have of many. Cash is another asset, shares are another asset. So land tends to be repriced so that its growth rate will sort of match other equivalent risk assets. That repricing can happen quickly or slowly, but all these different financial assets in the economy are priced so that they grow in risk-adjusted terms equivalently.
Yeah. Good answer.
I'll wrap it up.
Got in a lot of trouble for going over time last night, so look, I'm just going to keep going.
Oh yeah, you got to go there. That's it.
Okay. Has anyone heard that Auckland upzoned and it was a major success? Okay, great. So Tim's just talked about a lack of theory. Well, does it matter if we have the empirics? Well, I'm going to say, do we even have that? So let's look at 6 academic papers in Auckland, and we'll start with the background. What was the big upzoning that has been so popular globally? I was in Canada, and there's members of parliament there saying, we need to be like Auckland, like this little tiny city down in New Zealand is making a splash. What did they do? They upzoned 75% of the city basically to townhouses, so triple zone capacity. Tim's blue bubble went from something like 300,000 to 1 million. Of course, Auckland builds like 7,000 or 8,000 per year at the time. The share of new attached housing grew. So rather than more detached dwellings, you had more townhouses. So the composition changed. And part of that change meant each new dwelling was on average smaller because the proportion of townhouses was bigger. And there was a construction boom, and rent growth was slower than the rest of New Zealand. So I'm done. Thanks very much for coming. We got the empirics. Or should we read the footnotes as some suggest we should? The context really is important. If we remember Sydney in the 2010s, we had the biggest construction boom ever. That came after this big population pulse from 2006 to 2012. New Zealand had that same population growth pulse from 2012 onwards, so we might expect, in the absence of any regulatory change, that we'd see a similar pattern to Sydney. So that's the context that we need to have in the background as we try and unpick the empirics. So there's 6 papers on Auckland, and I've been told that 6 means that the empirics are solid because we know if it's good by the number of papers we've published about it. Right? The first one asked the question, did upzoning reduce house prices? It said its finding was intensively developed properties decrease in value relative to similar dwellings that were not upzoned, showing that large-scale upzoning had an immediate depreciative effect on pre-existing intensive house development. So basically, when they say intensive, they mean, well, it's already built for apartments, right? The ratio of the development cost to the land value. So the range of intensivity goes from 0 to 1. So it's 1 if it's all building and no land value, and it's 0 if it's all land value and no building value, right? And so they're saying, well, if you already intensively developed, your price fell. They put this in that abstract. They wrote it multiple times. What's the issue? It's extremely misleading because there's no data in the relevant range of intensively developed properties that fell in value. 99% of upzoned houses appreciated by 6% on average, potentially 1% of houses depreciated by perhaps 1%, depending on how much we believe their model fit. And of course, all the houses went up in value 67% over the study period. So to dig into what that looks like, you have to go down to Appendix A4 on a separate document and find this chart. And this line here is the line of best fit of the relative price growth of the upzoned houses with intensity ratio from 0 to 1. And they go, yeah, well, if you're low intensity and you got upzoned, your value went up, of course, because you've got more redevelopment rights. But if you were already highly developed, it went down. What's the problem? There's no data over here. All the data is over here. And they've taken a straight line and they've put it through and said, oh, you know, if you were all house value, no land value, it would have gone down. Now, I don't know why a line is necessarily the right fit. It could be a curve like this blue line, right? But what they've done is just they've taken this lump of data up here, they've drawn this line, 99% of the data is on that side of the line, and they've taken this and they've put it in the abstract and they've emphasized it as this amazing result and evidence. And I'm just like, you know, that's marginal at the best of times. Appendix A4, I feel like maybe the empirics are not as solid as they seem from what the authors tell you. So the authors then said, well, did it increase construction? And they did this second paper. 21,808 additional dwellings were permitted over 5 years following the zoning reform, corresponding to 4.1% of the dwelling stock. Right, so an extra 25% of the permits from 2016 to 2021. This is a big change, right? Like a 33% more, right? So a quarter of the extra permits. What are the issues? They picked out some special subsample of data we'll call it a fake structural break. The counterfactual is a weird straight line. They've taken a curve and they've put a straight line through it. And they've said, does it increase construction? And they've taken what are building approvals and said these are net additional dwellings, when in fact, because of the compositional change, there were net additional demolitions. All right, because when you do townhouses, you get 3 extra homes for 1 demolished, whereas if you build apartments or attached, it's different. You might have seen that, nice kinked curve, looks good, but if you add all the data back in, you get a nice smooth line. And the authors note in a later paper that, oh yeah, if we use all the data, there's no structural break at the time of upzoning. They literally say it. So this is why we need a theory, right? Because if zoning allocates things by location, which we wanted to do, and we upzone in the grey, and then we upzone in the blue, and we see that people build where we've zoned for them to build and not where we haven't, then this can also be interpreted as evidence of zoning works to allocate locations of the next increment of development. Quick glimpse at the data. The black line is dwelling consents, which are building approvals in Auckland. Remember, 2012, the population boom starts, okay? And then it starts rising, and then we have the unitary plan, and it keeps rising. And the counterfactual implicit in this method is that, oh, it would have kept rising, we've had a big population growth, oh, but for this upzoning, we would have suddenly flatlined like this. I don't know if that's plausible. Normally when we do this, we extrapolate the previous trend and look for deviations rather than assume a deviation compared to our previous trend. They did a follow-up paper. That's the decline in net additions. So if we look at completions 2 years prior and the net additions, you can see this grey area's accumulation of demolitions relative to previous norms, but that's not super good. So the quick round the grounds of a few more. Well, maybe this just straight line extrapolation in Auckland's not the right way. Maybe we need a synthetic control. Maybe we need to find other cities that are like Auckland to tell us what would happen after upzoning. So do other cities that match this curve in the last boom, what do they do in the next boom? And this paper says, well, 6 years on, the cumulative permits issued exceed those of the synthetic control. So the counterfactual we came up with by approximately 43,000. So now we're up to 45% of the additional permits were due to upzoning. What's wrong with it? Well, the counterfactual looks even worse than the previous kink line. Now, the sniff test would say, isn't it weird that this huge growth here would suddenly, but for the upzoning, have just suddenly reversed? There's actually, it's really funny. The synthetic control is basically picking other cities that match this pattern back here. And what it does, it ends up getting Tauranga and Kapiti. Does anyone know those towns? No, you don't, because they're very, very small. And it scales it up as a weighted average and said, yeah, that's what Auckland would look like. Ignoring the fact that these cities didn't have the population growth, but Auckland did right here. And so it's giving us the same sort of counterfactual number. We think it's kind of implausible that suddenly permits would start declining under those conditions, but for the upzoning. This has been very controversial. Some people want to argue about blog posts but this is sort of a summary. All these counterfactuals come up with this line. Oh, this is for me to prove that I know what they did because I did the same method multiple different ways. That's my synthetic control. Another one there, that's replicating theirs. And if we look at Auckland and Wellington, it's pretty funny also to show that, you know, the sudden cessation of growth of permits during the upzoning.
Where Wellington didn't have the same changes.
No, Wellington is known as a city where you can never build a house. And Auckland's known as the world's best example of upzoning. And if you scale their dwelling consents, and the fact that Wellington's population growth is much, much smaller during this period as well, in fact, it was a negative for a little period, you get that. That same method is used to ask the question, did upzoning reduce rents? And they go, yes, 26% higher under the counterfactual. So that's, or 28% higher, which is funny because the model actually says 35 and they go, we think that's implausible. We'll pick a smaller number, 28. So I think the authors have sniffed out that there's something weird going on. What's the unrealistic counterfactual there? So if I take this side here and I've got Auckland in blue, Canterbury in red, and Wellington in yellow here, you can see that they basically track together. One will deviate, but it can't deviate for long because there's a spatial equilibrium. People move between cities, right? What happens afterwards? Well, pretty much the same thing. This is real. This is their implied counterfactual. But for the upzoning, somehow, despite all the evidence in Australia, if you look at different rental prices in cities in Australia or New Zealand, you'll get this bizarre surge. In fact, it's higher than that. That's their conservative estimate, not the one the model actually says. We think that's pretty implausible for a few reasons. Firstly, rent-to-income ratios in all the major cities in Auckland were flat, and their baseline counterfactual of 35% sort of implies some sudden, unprecedented historical deviation when all these other cities pretty much had flat lines since as well. Okay. What about public housing? This is a fun one. Why don't we use the same method for public housing, synthetic control, go and see what public housing were built in other cities, match them up in the pre-treatment period. In this case, we reckon there's 7,000 extra permits for public housing attributed to the policy, which is 2/3 of them. Now, what's wrong with that? Well, it's pretty bizarre to ask what was due to upzoning when you can just ask the public housing agency's annual reports what they plan to build and how that changed, right? Because we can know exactly. And had you done that, you would have seen in the 2016-17 annual report the launch of the Auckland housing program, which we were building a pipeline of 24,000 new homes on our existing land holdings over a 10-year period, right at that exact same date. Right, so the reason Auckland has this public housing boom above other cities from 2016 onwards is because they launched a public housing program in Auckland in 2016 to build more houses than other cities, right? So we don't think it's plausible. Yes, there's probably some extra houses. I'm not saying that the effect is zero. I do think there's a positive effect from readjustment into different housing types. And it certainly did make it easier for the public housing developer, as they've reported, because their existing lots now they could be much more flexible with. I'm going to skip that. AMM, Tim's already said don't listen to it. I'm just going to say when the summary of those papers says we evaluate upzoning, upzoning generated this, given this is literally just someone's spreadsheet with no link to reality, you should just be very wary, right? All these outcomes are model simulations yet to eventuate in a model of optimal density. Last thing, bonus, aren't you lucky today? The Auckland chief economist in 2024 did one of their little reports and said, let's compare the population change, so the percentage change in population, with the percentage change in the stock of dwellings after the upzoning, or between the census years of 2018-23, right? So it's when you'd expect the upzoning in 2016 to start getting new homes. And they say, well, your authorities identified as Tier 1 urban areas in the NPSD, that's just jargon to mean cities. Auckland and Lower Hutt had the highest ratios of changing population and changing dwellings. Both had benefited from increased flexibility through changes to their land use policies. So this was all about, perfect, my last slide, all about re-emphasizing the same empirical story. We've got 6 papers. Now we've got this bonus thing that it was upzoning that made this ratio quite world leading. And they put this map here. And what's really funny, you know, Auckland's orange, so that means more dwellings per extra 100 people. Lower Hutt here is orange, more dwellings per extra 100 people. But what we don't have is Wellington, that notoriously terrible city where you can't build anything because there's nasty NIMBYs. Come on, just take a guess. Just take a guess. I'm going to stand in front of this. Okay. Auckland Council. So what they're doing is they're comparing the percentage change in population, the percentage change in dwelling count. So as we rotate this diagonal line around, this is the 1-to-1 ratio, this is the 2-to-1 ratio, 4-to-1 ratio a bit up here. That means the percentage change in dwellings was higher. And they put Auckland there and they go, look, we're way up here above this in this triangle. That's really good compared to the average. I think Lower Hutt's there too. Where do you reckon Wellington is? They left it off. Wellington's here. This is my version of their chart. That's the line. And Wellington's slightly above Auckland on that line. And they got really upset because they said, oh, well, actually, because Wellington had a negative population growth for a period, but still built 5% extra dwellings, despite people leaving, that somehow we can't put a negative number, so we should just leave it out. Right? So people left Wellington, and the planning was so good that they still built 5% more dwellings. And yet we've written to these guys, and they don't want to say anything. So I guess, thank you. When Tim says it's not really a theoretical story, people might say, yeah, theory doesn't matter. We've got the empirics. We've got 6 papers here on Auckland that show it's a world leader. I say check the footnotes and understand the methods, and you might be a bit more cautious. Now, I'm not saying don't upzone. I'm not telling you what to do. I'm just saying we don't know what we think we know, and we need to be cautious about policy claims. Thank you.